Todd Hultman from DTN is our corn and soybean market analyst this week. Land expense can dramatically impact a producer's chance for success. That was the topic of Todd's article on DTN this week. Todd found for corn producers who own the ground they farmed, corn never traded below the cost of production from January through November in 29 out of the last 40 years. However, if you rented the ground, 29 of the last 40 years fell below cost of production at some point, meaning success was far from guaranteed. We discussed that when we talked with Todd Wednesday, as well as soybean exports and his forecast for prices. But we began by asking about the Federal Reserve's decision earlier in the day to raise interest rates for the first time since 2006.
This has been a long time coming. Here we finally got it. We've been talking about it almost all year. The Federal Reserve did act. They raised that target rate 0.25% on each side. Overall, I can't say that it's going to have a dramatic effect on agriculture, except the bearish news of that is that it keeps bearish pressure for support for the U.S. dollar. The rest of the world is having a tough time, and as you know, the U.S. economy is doing relatively well compared to the world, so that keeps our dollar supported, and that makes it tough to export our grain.
Let's move down to Argentina and policy there. The new president, has reduced the soybean export tax from 35% to 30% and eliminated quotas on wheat and corn. Tell me how this makes Argentina a player now against Brazil and the U.S.
Well, obviously, it does liberalize their supplies somewhat, but I should point out that they don't have a lot of corn and wheat excess supplies at this time anyway. Their ending stocks are rather somewhat quite low on that count. For soybeans, which has been my main concern because they do have over 500 million bushels of ending stocks that they're anticipating in this current season, that would be the bigger bearish concern for the U.S. But the fact that they're keeping that soybean export tax up at 30%, I think is good news for our U.S. markets in the sense that it's going to prevent them from rushing out in any dramatic way. So the USDA just raised the export estimate for Argentina by about 500,000 metric tons. Not a big factor, and we might even get another 1,000,000 metric tons or more. But I don't think it's going to be a big bearish factor in 2016, certainly not what was feared before this policy was announced.
I want to talk about two articles that you recently wrote for DTN. The first is on soybean exports and the game between the U.S., Brazil, and Argentina for Chinese demand. Tell me how that's playing out.
At this point in time, as we just talked about with Argentina's policies, I believe the bulk of their soybean supplies are going to be kept out of the export picture as any big bearish concern for now. That leaves Brazil, and Brazil has already sold down quite a substantial amount of their supplies already because China's actually been a very aggressive buyer. You know, the headlines this year, we had a lot of concern about China's economy and what was that going to mean to soybean demand. But their soybean imports in China are actually up 15% this year, much of that coming from Brazil as a first supplier because Brazil's currency has favored those sales. But USDA is telling us that Brazil is going to have a very low amount of soybeans, 36 million bushels, as of the end of this current marketing season, which ends in January 30th. So for the next several months, it's going to be a one-on-one game, China versus USA, and we're going to have to see, is China playing possum a little bit with the pace of their U.S. purchases right now, or do they have stronger demand ahead? My concern is that it's really going to come down to this weather in Brazil, and if the weather stays good, I think China will be able to hold out and keep a low price scenario for themselves. But if a weather problem were to emerge, we'd actually very quickly have a bullish scenario in soybeans if that were to happen.
The other article you wrote about land expenses and the cost of corn production. Tell me how land expenses can hurt your chances for success over time.
We all know that your cost of production is the real key to your profitability on the farm, and we all know that in any given year how that works out. But I think it would be mind-boggling to many of us to take a look at just how this plays out over the past 40 years and how it really dramatically impacts your ability to survive the various markets. I compared two different scenarios One would be a farmer who owns his own land and has the best possible situation available, very low production cost, with USDA's estimated production costs for using the full land expense. Those two scenarios are dramatically different over a 40-year period. The guy without land expense does very well almost every year and is rarely stressed by price. But on the other hand, the fellas that have to rent their ground, it makes a big difference. It's a much tougher shot. And I think one of the hardest things about what they face is that it's not too uncommon to have 3 or 4 year periods at a time where they simply don't have a profitable price offered to them. So it's a very tough scenario, and I think a very sobering message for anyone out there in farming, especially the young guys, about the importance of having to keep your costs down.
All right, the final question is the easy one, Todd. What's your price forecast for corn and soybeans?
Boy, for corn and soybeans, Jeff, I have to say it's very hard to be sanguine with everything going on. Not only do we have comfortable supplies, but the international currency market is really tilted against us. It's very tough to get any exports going at this time. It's all going to depend on weather. I think corn, basically, the supplies are not exorbitant, but they are comfortable, and we've gotten down to a cheaper price level here. I really thought we were going to reach $4 by the end of the year. I'm not so sure of that because demand just is not doing very well. The best thing going for corn is the reluctance of farmers to sell at these lower prices, and that could help. Soybeans probably has the biggest risk, and it's going to all come down to the weather in Brazil. If they have another good year, that's going to keep our soybean prices definitely under pressure. But as I mentioned earlier, if there's any significant threat to weather, that changes the whole game on soybeans very quickly.